Eddie Mansell here from Ray White Projects with Daniel Pym from Loan Market. Wanted to touch on today one of the most interesting topics that I've sort of seen in the housing market. There's been a lot of talk about first home buyers, a lot of talk about the market downturn, but I find one of the probably most interesting parts at the moment are investors and what's going on with there, certainly across our group and a bit closer to home in terms of what we're seeing with rentals. We're seeing rental vacancies decrease dramatically, and we're seeing rental amounts increasing in terms of existing properties getting rental increases when the new properties are coming up for available. Also seeing a lot of renters, pretty much storming the place to try and lease a new place. It's become that sort of dramatic. But one of the most sought after topics is, can investors borrow? What's the outlook from banks against borrowing? Those sort of directions come through. So Daniel's our man. We thought we'd give him get him in and have a chat about it.
Yeah, thanks, Eddie. I think what we saw early on in COVID was investors, really had to take a hit and reduce their rent to keep the tenants in place.
Definitely.
And I think what's happened is that was kind of offset by really cheap borrowing for those investors. Now that rates have gone from 2% and they're now 5 or more percent, a lot of those investors are now thinking about switching their loans from principal and interest payments back to interest only to make it more affordable. So we're talking to a lot of clients about that.
Is that still possible? I mean, obviously, it's changing what traditionally has been the movement forward. I think interest rates were, after the whole APRA review, got changed sort of back to more interest rates interest and principal now back to interest rates.
Yeah, so for home loans, the banks really want you to pay principal and interest. But for investment loans, it's still perfectly acceptable to pay interest only.
Right.
I think a lot of the long-term investors though, when the rental yield was 2-3% and their repayments were principal and interest at 2%, they just let it roll. But now that those interest rates are like 5%, it's a big gap for them to pay. So if your expenses are too high, you've got a few decisions to make. You either sell and pay down some debt, or you reduce your outgoings. So the higher demand for rental income really helps, but also getting those costs under control is a good offset.
So if you're an existing investor, you've had a couple of rental increases on your property, should you be looking at refinancing your property at the moment?
It's definitely worth, the first thing I would say is talk to your bank or broker and renegotiate your rate. It's amazing how if you've had a loan for a couple of years and you think you're on a good deal, but then you hit the bank up for a better deal, you can do so much better.
And should they be doing that through a broker, or should they be calling the banks themselves?
Well, we do it for my clients. I do it for every client every year. And if your broker's not doing that, we'll talk to you or ask your broker, or worst case scenario, just go and talk to your bank directly.
Okay. In terms of the ability to go and borrow to buy another investment property at the moment, what's the bank's attitude towards that?
I mean, as the interest rates have increased, so have the assessment rates. So it's probably harder for investors with 2 or 3 properties to go and borrow again. But we're seeing a lot of first-time investors that have got heaps of equity in their home, they've got good disposable income. I mean, the reality is Aussies love buying property and they think it's a safe investment, and so you can still buy, and I think there's a lot more value now as well.
Yeah.
There's huge rental demand, and it's definitely an opportunity to get out there and see what you can get for your money.
I remember the advice from my father when I was younger in terms of investing was always buy and invest in somewhere where you potentially either live or see value or see an opportunity to. What's your sort of tips, I guess, in terms of if you're looking for an investment property?
Yeah, I mean, I've heard both sides of that argument. They're like, don't look at this as if you're going to live here. You're never going to live here. But I take the sort of traditional view that, look, if I walk into a place and I'd never live there, then I don't want to buy it. I think it's just easier to say, because if worst case scenario, you're a property investor, you buy something that you would live in and then something happens with your personal circumstances, you can live in there one day.
Agree. If you've got any questions or are considering refinancing or even a new loan, have a chat to Daniel.
Thank you.